Hey everyone, in this video, I'm going to be taking you on a detailed walkthrough of the Predicting Alpha terminal. Now, before we get started, it's important to remember that the Predicting Alpha terminal is extremely versatile and gives you access to a ton of information. Any idea that you're looking to explore or view in the market that you're trying to express, you can come to better understand by using the information available to you in the terminal. In this walkthrough, we won't be able to go over every single idea that you can explore in the terminal, but you will get a strong understanding of what is there for you to use, and hopefully it will spark some ideas about ways you can use that information to make better trading decisions. From pricing assets to finding inefficiencies, relative value trades, to understanding the market sentiment around a given stock, the versatility and opportunities you have within the Predicting Alpha terminal are countless. All of this is put together so that you can get creative with your trading, find real opportunities in the market, and make sure that the hard work you're putting into your trading, into your portfolio, actually pays off. So let's hop into it. So here we are on the landing page of the Predicting Alpha terminal. When you first sign in, this is the page that you will be brought to. Now, before we get into any of the nitty-gritty that you can explore in the terminal, let's first talk about the overall layout of the terminal and how you can navigate it. On the left-hand side of the page, we have a whole bunch of different tabs, each of which are a different page that you can go to find different sorts of information for a company that you're looking at. A key thing to note is that Volatility Analyzer, Fundamentals, and Option Calculator each have subcategories with more information for you to explore. In the main section of the page, we'll populate whichever tab you have clicked on, and it will populate different boxes that contain different pieces of information, each of which we can explore and gain more insight from. In the top right corner, you see this gear. And for pages such as the watch list, the fundamental snapshot, or the portfolio manager, when you open up the gear icon in the top right corner, there will be a list of commands that you can input that will impact the information you see on those pages. More on that in a bit. The last thing to note is that on the top of the page, you have the ticker selector. So when you want to look at a particular stock, you're going to come up here and type it in. So let's say I wanted to look at Tesla. When I click that, the information on different pages will now repopulate with the information for Tesla, whereas before we were looking at Apple. So for example, if I come up here and let's say now I put in Apple again, the information will repopulate and now I'm looking at Apple instead of Tesla. So let's go back over to Global Dashboard and talk about what each of these different boxes really mean. Now, before we get into a breakdown of the actual information within each different box, let's talk about how each of these boxes is laid out. On the top bar of each of the boxes, you'll get a couple of different pieces of information. Number one is the title of that tool that you are looking at, of what this box is going to tell you about. So for example, we're on the global dashboard right now, and this is the global news. So this pulls in big news stories from around the world and displays it in a way for you to quickly see the headlines, the summaries, and allow you to view the article if you just click over here, right? It'll populate the article on a new tab. Over here, we have a little question mark that accompanies each of these boxes. And when you click it, it tells you a quick summary of what you can expect from this tool, and actually has this Learn More button where when you click it, it loads a video that goes in depth about that particular section of the terminal. Some of these boxes will have a search feature here, typically the ones that have a lot of text, allowing you to search for keywords within the information being presented. So let's say I wanted to see information about Wall Street. I would type in Wall Street here, and any articles that have the keyword Wall Street from today will be populated in the box, allowing us to quickly filter through information that is presented in text form. Now that we understand how the terminal is laid out and how to go about navigating the terminal, we are going to go page by page, breaking down the information that you can gather from that page and how you would go about applying it to your trade decision making. So right now we are on the global dashboard, and as I said before, this is the page that you are going to land on when you first sign into your terminal. As the heading describes, we are taking a look at the global environment here. What are the macro events happening in and around the US stock market, which is what our terminal is focused on? First, we have global news, which tells us what is the big news happening around the world right now that could have an impact on the positions we are looking at. When you come into the market, you really want to have an idea of what's moving. What is the big news coming out right now? Is there vaccine news? Is there news about stimulus packages? What do I need to know before I start looking any further into the market? That is the kind of information that you have right at your fingertips when you're on the global dashboard. So global news takes a look at the news. And then under the global news, we have two very interesting categories called macro movers and macro volatility. One of the questions we may be asking ourselves when we first look at the market for the day is, what's moving? What industries are changing right now that I should be aware of? And we can look at it from two different aspects, which is why we have these two categories. We can look at it in terms of what has been the share price change for different sectors and different indices, and what has been the volatility change for different sectors and different indices. We have the volatility factor here because as option traders, we always need to understand where things are moving in terms of volatility. Are we seeing volatility pick up in a certain sector? Or are we seeing maybe volatility drop across the board? These are key indicators for us about the overall market sentiment about what we can expect moving forward. Combining this information with the news above gives us a quick snapshot of what is going on at a macro level in the market. Now, a quick way to read these graphs is that on the x-axis, we have the change, right? So change in share price or change in IV, right? Implied volatilities. And on the y-axis, we have different tickers. So looking at indices right now, we have USO at the top. So we can see USO has been the biggest gainer for today in terms of share price, up 0.9%. Whereas something like SPY has actually seen a decrease today, down 0.32% so far for the day. In terms of volatility, we are seeing SPY spike in volatility, up 6.46% today. Whereas something like GLD has seen a significant drop in volatility, down 5.26%. So what we can quickly tell here, for example, is that equities are becoming more volatile and the market is expecting an increase in volatility for equities, whereas something like gold is decreasing in volatility right now, indicating a higher degree of stability implied by the market for gold. Now that we understand what we're using the global dashboard for, let's move on to other tabs that are more company specific for when we have a particular stock that we want to analyze further. Next up on the list is news and sentiment. When we come to this page, we have a ton of information here that we can explore. And just like all the other pages moving forward, if we change the ticker at the top, let's say we look at Tesla, all the information will repopulate with the information for Tesla. So let's go box by box and talk about what we have access to on this news and sentiment page. At the top here is just called sentiment. And this gives us an overview of the overall feeling of the market towards the company that we are looking at. So let's go one by one here. Media coverage tells us how many articles are being published about the company we are looking at, in this case Tesla, this week relative to how many are published on average. And what we can see, for example, with Tesla is that if one is the same as average, there is actually only 80% of the articles that we typically see published for Tesla being published this week or in the last week. When we move over, we now see the retail sentiment. So this is pulled from social media data and allows us to see what is the general consensus among the retail community for Tesla. And what we can see here is that it is extremely bullish, 88% bullish sentiment, meaning of the information we gather from online, we can see that only 12% of retail traders are bearish on Tesla, whereas the vast majority are extremely bullish. Next up, we have option activity. This measure can be tricky to understand at first, but it gives you a really cool insight into what's actually being traded around the company today versus what we typically see traded. What volume of option activity are we seeing today versus what we typically see? And I'll explain to you now how this works. A measure of 1 is equal to the total daily volume that we see for the stock we are looking at on a given day. So right now it's 2:10 p.m. and the market closes in about an hour and 50 minutes. And we can see that the option activity is at 1.06. What this means is that at 2:10 p.m. today, we have seen over the typical daily volume of option activity, and we still have an hour and 50 minutes to go in the day. We can expect that as we move towards the close, this measure will continue to increase, signifying to us there is more buying and selling of options happening right now, more activity in the market for Tesla than what we see on the typical day for it. The next measure we have here is news and sentiment. News and sentiment gives us, similar to the retail sentiment, how bullish or bearish the news is. So when we pull keywords from the different news articles that are being written about Tesla right now, how bullish or bearish are those articles? How much positive news is being released versus how much negative news? And as we can see, as it currently stands, the news is about 61% bullish on Tesla, which is a lot more split than what we're seeing in the retail sentiment, for example. So as you can see, this top sentiment graph gives you a quick snapshot about what is the general consensus around Tesla. How much coverage is there? What are the retail and media sentiments about the company? And how much activity are we actually seeing around the company relative to what we typically see? So let's move on here. Next up, we have the company news. And this is a very similar tab to what we were seeing on the global dashboard when we were looking at global news. Except this time, it is company-specific news. Just like the other one, we have when the articles were published, the headlines, the source of the articles, the summary, and the ability to view the article by clicking on View Article in the right side of the box. We are also able to search for keywords. So let's say we wanted to find information about batteries. We type in battery here, and all of the articles that talk about batteries will be populated for us in the box. So moving on to the next box, we have company press releases. This is pulled directly from the company's investor relation page and is here to save you the time of having to go from company to company's investor relation page to see what news the company itself is actually releasing. You can easily access it here, and the format of this tool is the same as the company news section, where you can search for keywords, you see when the article was published, the headline, and a brief description of it. Moving on, we have 3 boxes here at the bottom, which each give us some more insight into what's happening around the company from a news and sentiment perspective. First up, we have sentiment analysis, which is the raw numbers used to create these metrics at the top of the page. So if you wanted to see how many articles were actually published last week versus how many are published on average, right? You can see 180 is what we saw last week, whereas on average we see 225. It makes sense how we're getting a measure of 0.8. If you wanted to see the bullish bearish percent, here you go. The news sentiment. And then there's this measure here, which is very interesting, which is the sector bullish percent, which tells us how bullish are people, not just about Tesla, but about the sector that it is a part of. Now, this can give us some very interesting information. As we saw above, retail sentiment is 88% for Tesla, but for the industry, it's only 66. And when we look at the sector news score at 0.53, we can see that the sector news score for Tesla is much higher at 0.61, which indicates to us that at this point in time, both the news and the retail trading community are more bullish on Tesla than they are on any other EV manufacturer. Moving on, we have company summary, which tells us the key information about any company that we want to look at, right? Where are they based? What is their market cap? What is the phone number if I wanted to call the company? How many shares are outstanding? All of this type of information is right here, easily available at your fingertips. Moving on, we have company ownership, which is a box that people find very interesting. It tells us who are the top shareholders in a given company. So something I find very cool when we look at Tesla is Elon Musk is actually by far the largest shareholder of Tesla. It makes sense that how Tesla's rallying through the roof and he's become the second richest person in the world because he has such a large stake in the company that he runs. You can also see how have they changed their position in the company over the last quarter. So we can see, for example, that Elon has been adding to his position, whereas Capital World Investors has been slightly decreasing their position. And that is a quick overview of what you get in the news and sentiment page. A quick snapshot about how people are feeling around a stock and behaving around a stock today relative to how they behave historically. Now that we've taken a look at the news and sentiment, it's time to dig deep on the volatility or option-specific information that is available to us in the Predicting Alpha terminal. Coming over to the Volatility Analyzer tab here, we are going to go through each of these subsections and break down how you can use it to better understand the stock and trade that you're considering. So let's go over to Volatility Insights. Now off the bat, we can see there is a ton of information for us to absorb here, and we're going to go step by step to make sure that each of these pieces of information are easily digestible and applicable to the decisions you make. The first thing we see when we come into this tab are these 4 boxes at the top here. The first box tells us what the price change has been for the stock today. The second box tells us what the market's implied volatility is for the stock over the next 30 days. Right next to the market implied volatility is our forecast of what volatility will be for that same period. So looking at Tesla here, we can see that the market is implying a level of 84% implied volatility, whereas we're forecasting volatility to be significantly lower at just 71.52%. This off the bat puts me in a mind state where I might be thinking that options are a little overpriced around Tesla at this point in time. From there, we have the 1-day implied move. So if we look at this market implied volatility, this is quoted in annualized terms. But what does this mean for what the market thinks will happen to Tesla over the next day? Well, that's what this measure here tells us. We can see that given the market's forecast of the future, the market thinks that Tesla will move about 5.73% in the next day. So off the bat, we can see here, well, do we agree or disagree with the market? And we can start thinking of trading ideas off just that information alone. But there's obviously more to explore, so let's get into it. Right under those key metrics is the volatility trade scanner. So one of the amazing features of the Predicting Alpha Terminal is not just that it simply allows you to display data, it allows you to mine the data, to filter for opportunities given the criteria that you think is best suited for your trade. Let's say you wanted to look for stocks that have high implied volatility relative to our forecast. Well, you could just come over to IV versus forecast right here and flip them around. So we can see that VFC has the highest implied volatility relative to our forecast, whereas UUP and HDS have the lowest implied volatility relative to our forecast. But it doesn't stop there. You're not just able to rank stocks by things like price, option volume, IV90, IV rank, etc. You're actually able to create ranges for each of these factors and start to narrow the pool of potential trading candidates before you rank them on any given feature. So for example, let's say that I only want to look at stocks that are above $15 in price. I'm just going to click on the text box under price, drag this meter a little bit, double click the first button in this box, and now I can change the price to whatever I want. Let's say I want to look at stocks that are above $15. You can see here at the bottom now that we went from looking at 877 total entries, or 877 stocks, to now 853 stocks. So we have excluded some of the stocks that we could have been looking at by setting the parameter that we only want to see stocks that are above $15 in price. Well, let's say I want to make sure that the stocks I'm trading have enough liquidity for me to get in and out of the position too. Well, now I come over to the average option volume, drag the button, and I'm going to type, let's say 3,000 here. And now you can see we've gone from looking at 877 to 491 stocks. Once again, reducing the pool of candidates to better filter for ones that meet our trading criteria. So let's say that of the ones that are still remaining, I only want to look at ones that have an IV versus forecast where the implied volatility from the market is higher than what I'm forecasting. Well, I'm going to want to change this to be, let's say, above 1.05 times my forecast. And you can see now that we've gone from 877 total entries to just 290 entries. There are now only 290 stocks that we are looking at. And let's say that I'm happy with the filters that I've applied and now I want to rank them by something. Let's say I want to rank them by IV rank. Well, I just come over here now and I hit the IV rank button and I can flip those 290 entries based on their IV rank. So we can see that of the stocks that made it through my filtering process, the ones that have the highest IV rank are SRPT, BMRN, and AMBA, giving me a couple of stocks that I may want to look further into to see if I can find a really good trading opportunity. Now, as your trading skills improve and as your ability to find unique opportunities increases, you are going to be making more and more use of this scanner, allowing you to quickly filter through all the opportunities you see in the market to find the ones that best fit the way you want to trade and the opportunities that you are personally looking for. Now, for the rest of this demonstration, I'm going to still be looking at Tesla just to keep it consistent across all the tabs. But let's say I wanted to look deeper into SRPT all I would do is come up to the ticker box at the top, type in SRPT, hit enter, and the information that is now going to populate throughout the terminal is for the stock that I'm looking at, SRPT, right? So you can see it's all different information here now. So let's get back over to Tesla and continue on with our terminal breakdown. So once we've picked the ticker that we want to look at, in this case, Tesla, let's scroll down beyond just the trade scanner to see what other information we have access to. The first thing you can see is a stock chart. We always want to have an idea of where the price is at and what's happened to the stock recently. When we're using a scanner such as this, we may not always know the stock that we are looking at, which is why it's important to have that historical view of how this thing has actually changed in price historically. The reason we may not always know the stock that we are looking at is when you're using a scanner like this, you tend to find the little golden nuggets that are hidden away in the smallest little areas of the market, things that the average person online isn't going to find. Meaning when you're looking on the stock forums and in the Facebook groups, you're actually not going to see people talking about them. So this price chart here, you can quickly drag, change the timeline you're looking at. You can change it up here. Lots of different things you can do to manipulate this chart. And if you want to learn more about it, all of these charts have that learn more button that allows you to dig a little deeper into how to get the most out of this chart. But let's move on for now. Here we have the implied volatility chart for any stock that we are looking at. And before we get into it, a quick thing that I forgot to mention is that for each of these boxes, you can actually isolate this graph to put it onto a single screen and get a better view of it. You do that by clicking the little arrows in the top right corner of each box, like this. And you can see that now we have a wider view of just this graph, allowing us to work with it with a little more ease. For the time being, we'll stay in this view though. Now, the implied volatility chart allows us to see how different forms of volatility have changed over time. If we zoom in a bit, you see that we can look at the IV 30-day, the RV 30-day, the IV 90-day, and the forward volatility 60-30-day. We can look at each of these individually, or we can actually plot them against each other to see how they have moved in relation to one another over time. So right now, for example, I have the IV 30-day and the RV 30-day plotted for Tesla. And you know what? Let's throw on the IV 90-day as well to see how all of these things have moved together in, let's say, the last month. So I'll click 1 month here, and now we can see how each of them have moved. We can see that the IV 90-day and the IV 30-day have both been above the realized volatility for basically the entire month, with the spread starting to narrow in the last week, but now, just today, it's starting to create a bit of a gap again. This information quickly tells us that the market has been overstating the amount of volatility we can expect to see for Tesla, meaning that the options, at least historically, have been systematically overpriced. We can see that buying vol wouldn't have been profitable in the last month because the realized volatility has been less than what the market implies. When we combine this piece of information with something like our implied vol versus forecast, we can start to paint a picture that maybe volatility is still overpriced here and being short vol might be the right play on Tesla right now. For this graph, you can make many different comparisons by changing the lines that you have plotted, and you can also adjust the time frame that you are looking at. Now within this tool, we have one more box we can look at, which is the historical skew. We can look at the 30-day skew as well as the long-term skew. And the easiest way to interpret this graph is that the higher the lines, the more put skew there is, meaning that the market thinks there is risk to the downside and an increased demand for the puts. But as the line moves lower, the view starts to change, and we see that it now has what we call call skew, meaning the market thinks the risk is to the upside and there is an outpacing demand for the calls. So reading this graph for Tesla right now, let's say we look at the last 6 months, we can see that there has been huge call skew for almost the entire time, and that there was only one period where the risk was interpreted to be to the downside, and that was in early November. We can use this information to get an idea of how skew has changed over time, and skew is a graph that you see right down here, which we'll be getting into in just a little while. So let's keep moving. Up next, we have the volatility cone, which is a very insightful graph that tells us about what the volatility has been historically for the stock for different expirations. So let's start by having nothing on here and breaking down what we actually have available on this graph. So on the y-axis is going to be the level of implied volatility. right? Is it 100% implied? Is it 200% implied, etc.? And on the x-axis, we are going to have the days to expiration. Are we looking at the 10-day options, the 30-day options, the 60, the 90, the 120, etc.? And we're able to plot different lines on here to make sense of the level of implied volatility we're seeing now versus what we typically see for the stock historically. First thing we can plot is the current implied volatility, which is basically the term structure for the stock that we're looking at, which is Tesla. Now, I want to know if this term structure is close or far from what the average is for Tesla. So what I can do to look at that is plot the median. And we can see that across the term structure, the level of implied volatility is elevated relative to the average implied volatility that we see for Tesla. So off the bat, now we're seeing a picture, right? The market is implying higher volatility than what we forecast it to be in the future. We can see that if we go to the implied vol versus realized, that the market has been overstating volatility for quite some time now. And when we look at the vol cone, we're now starting to get an even better sense that vol might be overpriced here, because the entire term structure has an elevated level of implied volatility relative to what we typically see for the stock. But the vol cone doesn't just end there. Maybe we're not too concerned about where it is relative to the average right now. Maybe we want to say, well, where is it relative to what we typically see for the stock? Maybe if we increase the range of that average, we'll get a better picture of where it is. And what we can plot for that are these two lines here, the first quantile and the third quantile. Now, what you can see is that these two lines create a range between them, right? Now, this range tells us a couple of different things. The first quantile line is the 25% mark line, right? So below this line is the level of volatility that we see for the stock 25% or less of the time. And this third quantile line is the 75% mark, meaning that all the volatility below this line is 75% of what we see, and above it, we only see 25% of the time. The third way we can use these two lines is that the gap between them, if we take 75 line minus the 25 line, this is what happens 50% of the time. So this is a good estimate for the range of volatility that we can expect to see for the stock. So let's plot our current implied volatility and see where it falls relative to our first and third quantiles. And look at that. Every expiration is elevated relative to the third quantile, meaning that we are seeing levels of volatility that we typically do not see for the stock. It's much higher than the range we usually see. We know it's much higher than the median, but we're not done yet. There is still more that we can explore here. Next up, we have, if we take off the first and third, we can look at the minimum volatility that we've seen, right? So we can see that, the minimum volatility for each of the expirations has been pretty high for Tesla, 38% at the 60-day mark, 27% at the 10-day mark. And we can also plot the maximum volatility we have seen. Now, what we can see here is that the current line is much below the max line, but we have to remember that included in this max line is things such as COVID, right? These further dated options still had some of that trickle effect from COVID, causing this maximum to be much higher. COVID had the highest levels of volatility that we've seen in modern times. So it makes sense that the max would be significantly higher than what we're seeing today. For the purposes of this demonstration, let's take off the max and the min, put back on our first and third quantiles, so we get a clearer picture of what's happening in recent times for Tesla. And we can see that the vol cone is telling me the level of implied volatility we're seeing now is higher than the median, and in the near future, well above the third quantile as well. So this is how we're going to use the volatility cone to get an idea of where the current levels of implied volatility are relative to what we historically see for the stock that we are looking at. The next graph that we are going to take a look at is the realized distribution. Now, this graph allows us to take a quick look at one thing in particular, which is what are the moves that we see for this stock versus how often do they actually happen? So when we plot the actual returns here, we can see two things. What are the size of moves that we see and how often do they happen, right? That's what the y-axis is telling us. It's frequency. We can see that the most frequent moves for Tesla are small positive or small negative moves. We typically see, a 1% up, a 1% down. But still very frequently, we see, almost 5% of the time, a 3% down move or a 3% up move. And still quite frequently, we see things like, 1% of the time we're seeing a negative 7% down move. And, 1% of the time we're seeing a positive 9.7% up move. So we wouldn't say frequently, but often enough, we are getting these huge swings for Tesla. Now, what we can plot on top of this actual return is the normal distribution that has the standard deviation of the actual return plot. And this allows us to see, where do we get the real tail risks, right? So if we look at this graph, we can see that over here, we have some tail risk, right? It moves outside of the normal distribution a lot more on the upside than on the downside, meaning it might make sense if the market is pricing risk to the upside, which we can see in the skew, because we see that if we are to get a big pop in price, it's typically to the upside, not to the downside. So a quick review, the realized distribution allows us to see what are the most frequent moves for a stock and where do we have that risk. Is there a lot of risk to the upside or to the downside, or maybe both? We are able to see the frequency of moves and how big these moves are by quickly taking a look at the realized distribution. So let's move on. Up next, we have the skew analysis. The easiest way to understand skew is that it allows us to see how implied volatility changes across different strikes for a given stock. By seeing how volatility changes across different strikes, we are able to pull two major pieces of information. Number one, where is the market pricing the risk? Is it to the upside or to the downside? And number two, where is there demand for options? Is there more demand for calls or for puts? So looking at this graph, on the y-axis, we have level of implied volatility, and on the x-axis, we have delta. The easiest way to think about this is that the dot in the middle is the at-the-money strikes. On the left side is the out-of-the-money calls, and on the right side is the out-of-the-money puts. Now we have three lines on this graph, and each one tells us about a different data expiration for the option chain. So if we wanted to look at the near dated options, we just take off 30 and 90, and we can see just the 10 data expiration options. If we wanted to compare the 10-day to the 30-day, we can plot both. And if we wanted to have all three on, we simply have all three boxes checked. Now, there are a lot of different ways that you can actually extract value from this skew graph. For example, if you have a directional view and the skew is to that direction, you can structure out some good high risk to reward trades by trading into that skew. Or let's say you think the opposite. Let's say there's call skew and you think the move is going to be to the downside. Well, you could maybe sell some of those expensive calls and buy a few cheap puts financed by the calls that you were selling, which is also what we call a risk reversal. So the skew graph and the term structure are side by side because, to recap, the skew graph tells us how the level of volatility changes across strikes, and the term structure graph tells us how the level of implied volatility changes through time. Skew analysis is across strikes, term structure is across time. So let's break down what we have here for the term structure. Just like on the skew analysis, on the y-axis, we have level of implied volatility, but this time on the x-axis, we have the different expirations. So closer to the left side is the near expirations, and on the right side is the further dated expirations. So as we move across the x-axis, we're going further out in time. And we have three different lines that we can take a look at here. We have the implied volatility, or simply just the term structure for the stock. We have the non-event volatility, which allows us to see what would the level of implied volatility be if there were no event. Having both of these plotted at the same time allows us to see where the market is pricing in an event for Tesla. We can see that the implied volatility for the 60-day options is at 82, but the non-event is at 75, leading me to think there may be something here because we see a deviation between implied and non-event. So we may see an event around this time in the future for Tesla. Given where we are right now, mid-December, and this being 60 days out, this could be their next earnings event, being priced into the options. Finally, we have the realized volatility. So the way to think about this is that these two lines look forward, but this line actually looks backward. What has the realized volatility been for the last 10 days, or the last 20, 60, 90, 120, or 252 days. And we can use this as a comparison of what has happened historically versus what the market is implying for the future of the term structure. There are many different ways that these two graphs in conjunction and separate from one another can be applied to your trade decision making. If you want to learn more about these charts, you just come over here and click learn more. It'll populate a video for you. The last graph that we have on this page is the IV30 versus share price. And what this graph allows us to really visualize is the relationship between changes in implied volatility and on the bottom here, changes in share price. What we can see, for example, is that this dot here where Tesla shares went down by 2.35%, it also resulted in that same day as a negative 19% drop in implied volatility. And if we look over here, for example, this dot, we can see that Tesla went up on this day by 4.8% and implied volatility went up by 15.49%. So now for Tesla, this graph shows us something very interesting. And we can see that by this line of best fit, which is that there is actually a positive relationship between implied volatility change and share price change, meaning that as Tesla goes up in value, implied volatility actually increases, which is the opposite of what we typically see for equities that are in this sector. Typically, we see a negative relationship, meaning that when stocks go up, volatility tends to decrease. And when stocks go down, it tends to increase. So a very interesting relationship that we can see here using this graph for Tesla. So for example, what we can pull from this is, let's say you are short vol on Tesla. Well, you are also implicitly short delta because you are hoping that the stock moves down, because when the stock moves down, vol tends to drop. So there are some very interesting insights that we can pull from this graph. Now that we have gone over the Volatility Insights tab, let's move on to the next one, which is called Skew Analysis. Now what this tab allows us to do is really two things. Number one, we can compare how skew has changed for a stock over time. And number two, we can compare the skews for different stocks against each other. So let's go through this. Right now we're looking at Tesla. And let's say that we're interested in how the 10 data expiration skew, right? We have 10 data expiration selected here, has changed for Tesla between today and let's say last week Friday. Let's plot them. And here we have both of the skews for Tesla, the blue line being the skew of today and the green line being the skew of the 10 data expiration options for Tesla as they were 1 week ago today. And what we can see is that the skew has changed significantly. The level of implied volatility across the 10 data expiration strikes has dropped on the call side significantly and actually increased in the way out of the money puts for Tesla. Another way that we can use this is to compare, let's say, how the skew for Tesla has changed relative to, let's say, Nikola, a competitor of theirs. And we're going to adjust the date so that they are both looking at today's skew for them. Let's say this time, though, we want to take a look at the 30-day skew. So I'll change those to 30-day, hit run, and there we have it. We can see that Nikola has a much higher level of implied volatility across the 30-day strikes relative to Tesla. Now, there are many different ways we can use this graph, but those are the general insights that you need to be aware of as you get started trading with data. Just like we did for skew here, the next page, term structure, allows us to do the same thing, but instead of looking at the skew, we are looking at the change in term structure. So let's do the same thing and look at how Tesla's term structure has changed between this week and last week. So Tesla for both tickers, have both these boxes checked. Now we're going to adjust the date on the second one to be 1 week ago today. And we're going to look at it in terms of a ratio. You are going to use ratio anytime you are comparing a stock to a stock or an ETF to an ETF. But if you compare an ETF to a stock, you're going to switch it to absolute values. Now that we have everything selected, let's run it. So here you can see that the level of implied volatility across the term structure has dropped in the last week for Tesla. What this tells us is the market is reducing how much they think this stock is going to move relative to what they thought it would be last week. And for me personally, this is really good because I've actually been short vol on Tesla since last week on these 120-day expiration options. So we've seen the level of implied volatility for these drop from 78 to 71, which is very good for the trade that I personally have on right now. Now, if you wanted to actually see the ratio between these two, that's what the graph below tells us, right? The term structure comparison, on the y-axis, we have the ratio between the two. And on the x-axis, we once again have the days to expiration. So we can see that the biggest difference in terms of ratio has been for these 20-day to expiration options, where the ratio is just 0.82 between the two. And then as we go further out in time, we see the ratio go up to about 0.9 to 0.92. So going back up, let's say we wanted to compare the term structure for Tesla to the term structure for Nikola. And I'm going to adjust this so that we're looking at the same date for both of them. And then I'm going to click run. So we can see something very interesting here. We can see that as we go out in time for Nikola, the term structure actually elevates in terms of its implied volatility. Whereas for Tesla, it's the opposite, where it actually goes down. When we look at the ratio between the two, we can see something very similar, where at this point, Tesla, right, because Tesla is the one we have on top, so this would be the top of the ratio divider, we can see that Tesla has a very high near-dated implied volatility relative to Nikola. But as we go out in time, this actually drops off to now we're at a point far dated out where the implied vols for Nikola are significantly higher than the implied vols for Tesla. This is very useful if we're trying to find a trade maybe between the two assets instead of just looking at one of them individually. Now that we have an understanding of how we can break down our skew analysis and our term structure analysis, let's move on to this tab here called relative value. Now the relative value tab gives us a lot of functionality. We can look at anywhere between 2 and 4 tickers at the same time, or 2 and 4 different variables at the same time. Let's say that I want to see how the implied vol 30-day for Tesla and the realized vol for Tesla have moved together historically. Well, I can just check off these 3 boxes, change the comparison factors to IV30 and RV20, make sure Tesla is the ticker for both of them, and hit run. And now I can see a couple of different things. Firstly, we have them plotted against each other here across time, right? So we can see that they typically move pretty close together, but in recent times, we've had that spread that we were seeing back on the Vol Insights page. But now we can actually take it a step further and look at the ratio between the two. When we look at this, we see something pretty interesting. We see that it actually looks like a mean reverting process. The spread between the implied vol 30 and realized vol 20 for Tesla is mean reverting. So when we see it approach the top of the range, we could make a bet on this spread changing, coming down. And when we see it at the bottom of the range, we could do a very similar type of trade. When we look at it here, back when I put on my position, let's say, we could see that the implied realized spread for Tesla was near the top of its range. And every time it reaches this point in the range, it usually mean reverts back down. So I structured this trade betting on that coming back down. So let's say I wanted to compare the same comparison factors, the IV/RV for Tesla, to let's say SPY. Well, what I can do is I can come over here, checkmark these 3 boxes, change these tickers to SPY, and then change the comparison factor here to RV20, hit run, and now both Tesla and SPY, implied vols and realized vols, will be plotted on this top graph. But what's really valuable is that we can now plot the ratio for IV/RV for Tesla against IV/RV for S&P. This can be extremely valuable for relative value trades or for trades where we are trying to understand how a particular stock is moving relative to similar assets, right? If we see, for example, that Tesla is significantly higher spread relative to the other comparable stocks such as Nikola, well, there might be a trade that we can take there. And this page allows us to dig deep and uncover those more hidden trading opportunities that the average trader is just simply unable to find. Now, this next page allows us to dig deeper on the correlation between 2 tickers. So let's say we wanted to take a look at Tesla, and let's go to Nikola. Put those into the 2 boxes, hit run, and look at this. We now have the equity price comparison for the 2, so the actual share price of the stocks relative to one another on the same graph. On this y-axis, we have it for Nikola, and on this y-axis, we have it for Tesla, so that we can easily plot both against each other. And we're able to adjust the time period that we look at for this equity price comparison. Below that, we have the 90-day rolling correlation. So what is the correlation between these 2 assets over time? So let's say we look at the 3-month period here. We can see that the correlation for the two has increased as we approach today. Moving down, we can see the stock return correlation. So we can see how correlated is a change in share price for Tesla relative to a change in share price for Nikola. And right now, it's hard to see any relationship. And what it might be due to is things such as this outlier out here, where the change in share price for Nikola was drastically opposite of what we saw for Tesla. So what would this data look like if we maybe took out some of these outliers? Well, we can come back up here, remove the outliers, we can locally detrend the returns, and remove the time varying volatility to hopefully get a better fit. And we can see now that this line is starting to make a lot more sense. And we see that a positive change in price for Nikola is correlated with a positive change in price for Tesla. We can even see the degree to which they are correlated by looking at this line of best fit. The last thing we can look at on this correlation page is the beta between the two assets we are looking at. So we can see that the beta between Tesla and Nikola is about 0.154, and the intercept for the two is 0.002. Now, this relative value page is something that you're going to want to really familiarize yourself with as you progress through your trading career, because by looking at assets relative to one another, you're able to add a level of analysis to your trade decision making that could really be the difference between coming out profitable and unprofitable. And that concludes the volatility analyzer section of the Predicting Alpha terminal. So let's move on now to another high value section, which we call the earnings analyzer. The earnings analyzer is a page completely dedicated to the earnings events of companies. And we have a number of different factors that we can look at to better understand how a stock is going to move around their earnings event. Similar to the volatility insights page, right at the top, we have a couple of key metrics that we need to know about the earnings. First up, we have the implied move for the next upcoming earnings event. So as we can see, Tesla has an earnings potentially on February 2nd, 2021. And as it currently stands, the market is implying an 11.27% move for that earnings. Now, what's important to note is that this implied move, and average implied move numbers are quoted in percent move up or down, right? An absolute percent move. These are not in implied volatility terms. So an 11.27% implied move up or down for the earnings event on February 2nd, 2021. Next up, we have the average move, which is if we look at the last 4 years of earnings for Tesla, how has it moved on average around its earnings event? And we can see that it moves on average 7.42% up or down on its earnings. Relative to the implied move, we can see that on average, it doesn't typically move as much as the market thinks. But how much does the market on average think it'll move around earnings? Well, that's what this average implied move is, right? We know the implied move for the upcoming event, but on average, it actually implies only 8.11%. So what we can take from this is that for the upcoming event in a few months, the current implied move is significantly higher than what the market typically thinks we're going to see. We can also see that comparing the average implied move to the average move, that the market historically has been on average overstating how much volatility we will see or how big of a move we will see for Tesla around their earnings events. The fourth box here is the earnings date. What is the forecasted earnings date for the company we are looking at, aka in this case, Tesla? Now, similarly to the volatility insights page, we have a scanner. We want to maybe be able to find companies that have earnings coming up this week or next week or tomorrow or even today. Or we may want to find companies that are priced over a certain amount or have a certain implied move. There are so many different factors that we could want to search for companies by when we're looking at earnings that we felt it necessary to create a scanner to allow you to find the opportunities that best suit the trading strategy that you are looking to implement. So let's say, for example, I want to look at companies that have a price over $72 that also have an implied earnings move of over 10. Well, let's apply those two filters and see what we find. Well, we've now gone from looking at 726 total stocks to just 31. Right off the bat, we have cut the entire pool of stocks that we could look at from hundreds to dozens. Let's say we want to rank these remaining ones by straddle P&L. We can do so just by flipping the remaining stocks based on this. And we can see that ENPH is a stock where the straddle P&L has been huge, buying vol around the event has worked out really well. And maybe that's something that we're really interested in, and now we can easily take a look at it. So just like on the Vol Insights page, this earnings scanner allows you to quickly find opportunities in the thousands of stocks that are out there. By having access to a scanner like this, it saves us the time of having to go through all the tickers that we're interested in, and it even allows us to find opportunities that the average trader simply is going to be unable to find due to time constraints or the fact that they may not even know an opportunity lies outside of the scope of what they're able to see with their own eyes. Allowing us to filter by data lets us pick up on trends and opportunities that we may not be able to see if we were just looking at the companies ourselves. Let's say we pick a stock we want to look at, and because we've stuck with Tesla, we'll stick with Tesla here. We would just come up here, type it into the ticker box, and all of the information on this page would repopulate with information for that company in particular. So now that we're looking at Tesla, let's move beyond the earnings scanner and take a look at what else we can find. The first box here is called Moves, and it allows us to see a couple of different things. On this first chart here called Moves, we can see for the last 4 years of earnings event, 3 things: the implied earnings move, the move, and the jump. So let's take off the move and the jump right now. Implied earnings move. For each of the events in the past, over the last 4 years, what has the market implied the earnings move to be for Tesla? Well, that is what we can see by this graph here in absolute numbers. So this doesn't tell us up or down. It just tells us what the implied percent move was for Tesla at each of the earnings events. Now, if we take off the implied move and put the move and the jump, we get some more insight. The jump tells us what the move was right away when the news was priced into the stock. And the move tells us what happened to that stock overall from the moment that the news was released to the close of the next trading day. And this allows us to see some very interesting information, such as, is there any post-earnings announcement drift that we could be taking advantage of? By putting all 3 against each other, we get a clear picture of what happened for each of the earnings events historically for Tesla. What was the implied move? What was the jump? And what was the total move for the stock around each of these events? The next graph here, implied move change, shows us how the implied move for the stock changes over time. Over the course of the year, how does the implied move that's embedded in the options actually change? For more advanced traders, this is going to be a very interesting tool for you to explore as you're looking at a company's earnings event. Up next, we have the IV30, which is how has the implied volatility for the 30-day options changed from before the event, which is the green bars, to after the event, which is the blue bars. By plotting both against each other, we can see how the implied vol that's baked into the option that we're looking at, if it's the 30-day option, changes once the earnings is completed. And we can see that for Tesla, each time the earnings finishes, we typically see a large drop off in the implied vols for the option on hand. The final thing we can look at here in the Moves tab is the straddle price. Right? We have an idea of how this implied vol 30 changes, but how does the at the money straddle price change when looking at these events? We can see here that for each of these events, we see somewhere between a 10% and a 20% drop in straddle price or change in straddle price after each of these events. There's a lot of interesting information we can pull from this. For example, if we see a stock where the straddle price doesn't typically change after the earnings event, it might signal to us that we could be long volatility going to the event. Because if we don't get that surprising move, we could be okay and come out relatively unscathed because the price of the straddle is unlikely to have changed much, giving us a cheap long vol opportunity on the stock we're looking at. And that is just one example of the many ways we can use this straddle price graph. Moving on from the Moves tab, let's take a look at strategy P&L. When we are analyzing a company's earnings, questions that we ask ourselves are things like, how has buying a straddle performed around Tesla? Or what about buying calls? Or what about buying puts? How would I have done if I had followed each of these different strategies trading the earnings for this company? And that is exactly what this strategy P&L shows us. This graph is looked at from the buy side. So buying a straddle, buying calls, buying puts. And we can look at this graph in 2 different ways. The straddle P&L for each event and the cumulative P&L if we had been trading this strategy across the last 4 years of events. Now, an important thing to note is, let's say a company is relatively new, maybe they've only been around for 1 year. Well, we're only going to see that 1 year of events. We are not going to see 4 years. The maximum range we can look at is 4 years, But obviously, if a company only has had one or two earnings, all you're going to see is one or two earnings in each of these plots. So coming back to the strategy P&L for Tesla, if we look at buying straddles, we can see that there have been some big up moves, but overall, it's been a losing strategy. We would be down 49% buying straddles around Tesla earnings. On the flip side though, this means that if we had been selling straddles around Tesla earnings, in the last 4 years, we would have come out with a 50% profit. This signals to me that selling volatility around Tesla earnings, while there is risk of a few big losers, is an overall profitable strategy. Or at least that's what it has been historically. And we can see the same thing for the calls here, right? Buying calls has been unprofitable, meaning that selling calls would have been extremely profitable. We would have been up 100% selling the calls here, and something similar for the puts. But we actually see that buying puts has been slightly profitable. In the long run, you would have made 7%. Nothing amazing, but it's not a huge loser to be buying these puts around the event as a systematic strategy. Looking at this straddle P&L gives us some more confidence as we go into making a decision. So if we see, for example, let's say this Tesla event is now tomorrow, the implied move is significantly higher than the average move and the average implied move, and we see that the straddle P&L is negative, well, maybe selling vol here is not a bad idea. Up next, we have the industry move comparison, which allows us to compare the implied move and average move for different stocks grouped by market cap that are in the same or similar industries to Tesla. So what we can see is that right around here is the average, where the average implied move is 6.1% and the average actual move is 5.23. So we can see that the average move for similar companies to Tesla is much lower than what we're seeing for the company on hand. We're seeing that Tesla's implying 11.27%, which is way out here somewhere, giving us further insight that maybe vol is overpriced going into this event. Up next, we have the earnings distribution. Now, the earnings distribution shows us how much has the stock moved on the x-axis around their earnings versus how frequently do we see that move. So what we could see, for example, for Tesla is the most frequent move is about a negative 4.5% move that happens about 4.6% of the time. We can see that the most frequent moves for Tesla are about between a 3% up move and a 6% down move, right? But we can see as well that if we are to get that big move, we are more likely to get it to the upside than to the downside, right? We look at negative 20% down move, it happens only about 0.002% of the time. Whereas if we look at that positive 20% up move, it happens actually about 1% of the time. The final graph we can look at in the earnings tab is the seasonal impact. Now, different companies have different times of the year where they're more or less successful. For example, a company like Amazon, you could expect to have better earnings towards the end of the year when there's things like Black Friday and Christmas. So we might expect the earnings for that part of the year to be greater than what we typically see. So when we look at the seasonal impact, we can see, for example, that Q2 is when typically Tesla has their most predictable and lowest earnings. Whereas times such as Q4, we get a huge range of moves with the potential for absolutely massive moves. The biggest move we've seen for Tesla has come in the fourth quarter earnings. By taking all of this information into account, we can look well beyond what the average trader can see to make informed decisions about earnings. Now, a lot of people stay away from earnings trading because they can't predict what's going to happen around the stock. But I hope it's clear now that by looking at information of this nature, we can get a better idea and find a small edge trading these earnings events. Now that we're done with the earnings tab, let's move on to our watch list tab, which allows us to do some pretty cool stuff. When you first come over to the watch list tab, you are going to see nothing. There will be nothing populated here. And that's because we haven't uploaded a watch list for us to actually take a look at. That's when we're going to come over to this gear tab in the top right corner. When you click on the gear tab, a whole bunch of different options pop up. You're able to select stocks and select indicators, and then you go ahead and you can actually plot it. When you create a list of stocks and indicators that you want to look at, you are able to actually save those tickers as a file, and then in the future, you can just upload that file, right? You just do use uploaded tickers, click browse and select your list, and do the same for indicators, and you can quickly and easily populate your customized list of indicators or filters and the stocks that you want to look at. So for this example, let's look at Tesla and let's say the FANG stocks. So Facebook, Amazon, Apple, Netflix, and Google. Let's say the indicators that we want to look at are price, IV versus forecast, skew, and RV. Now that we have all those selected, let's go ahead and click run. A couple of things populate here off the bat. The first thing is that we actually get our own scanner at the top here, allowing us to compare all the different stocks we're looking at. So we can sort them by price, for example, IV versus forecast, skew, all of the indicators that we had originally picked when we populated the list. But we can also see something else that's very interesting here. When we select our stocks, we are given a correlation matrix between the assets. So we can ask ourselves, how correlated is the price of Amazon with the price of Apple? Or let's say the price of Netflix with the price of Facebook? Well, by looking at this correlation matrix here, we are able to see how correlated it is. The lighter the boxes, the less correlated. The darker the boxes, the more correlated, until we get to these ones that say 1, which is where, Facebook is being compared to Facebook. Obviously, it should be 1. So let's say we want to take a look at Tesla again and say, well, how correlated is this to the different FANG stocks? Well, we can see that across the board, it's not very correlated, right? The correlation between Netflix and Tesla is just 0.38. And the highest correlation is between Tesla and Apple, which is just 0.48. Well, what if we add a stock that is maybe more like Tesla, such as Nikola? Well, let's plot it on here, rerun it, and have a look. So here we have NKLA and Tesla, and we can see that they actually have a negative correlation. When we see an increase in the share price of Tesla, we would probably see a small decrease in the share price of NKLA. Regardless, this is not a really significant level of correlation that we could make a trade-off of. We could basically say that they are extremely uncorrelated, which is interesting seeing as they are producers of similar product for consumers. As you become more acquainted with the Predicting Alpha Terminal, I believe that this tab will become a page that you put to good work, allowing you to quickly look at a list of stocks that have piqued your interest, or maybe even your own portfolio, the things you currently hold, if you want to see how they are correlated to one another. So let's move on. Up next is fundamentals. And within this section, we have financials and snapshot. Let's start with financials. When we come to the financials page, we have 3 different types of sheets that we can look at, and we access them by clicking the gear in the top right corner. We can look at, for any company listed in the terminal, the income statement, the balance sheet, or the cash flow statement. Not only can we see the current statements, which would be this row here, but we can also see the historical statements. So we can compare, for example, how their EBIT has changed over time. And we can do this for all 3 of these sheets. Moving on to snapshot, we can actually compare different fundamental factors for the stock that we're looking at. Let's say we wanted to compare Tesla's cost of goods sold to their EBIT to their gross income. Well, we could plot all 3 of these simultaneously to see how they have changed relative to one another over time. Let's say we wanted to look at year to date or let's say we even wanted to zoom in on, the last couple of years. Well, we can see how they have moved together. And we can do this for any of the factors that are listed on their income statement, balance sheet, or cash flow statement. This tab is specifically for people who want to get that fundamental edge, that level of research that most investors don't venture towards when they're trading volatility. When we look at something like an earnings event, for example, taking a look at the fundamentals in depth can give us a huge edge, both in terms of volatility and direction, that can be the difference between a winning and losing trade. So now we've gone through the major categories of the Predicting Alpha Terminal, but we still have 3 more to break down. Up next is quantitative strategies, or what we just call quant strats. So an interesting feature of the Predicting Alpha Terminal is that we are going to include pre-built strategies that generate alpha that you can simply follow along with. Let's say you wanted to run a value investing portfolio, or a momentum portfolio, or run an overnight risk premium holding strategy. Well, we are going to be developing tools for each of those strategies, allowing you to quickly filter for the best opportunities given the criteria that fits that strategy, and then quickly implement that into your portfolio, minimizing the time and effort that you need to input to run a book that generates alpha. Quant strats are still under development, but they will be included in the terminal in the very near future. Up next is the Portfolio Manager page. Included with each subscription to the Predicting Alpha terminal is a trade journal spreadsheet. When you fill out that spreadsheet with the different strategies and trades that you've placed, you are able to come over here and upload it into the Predicting Alpha terminal to break down your entire portfolio by returns, by premiums, by strategy, by risk, by a million different factors, allowing you to get that professional grade insight into how you're running your book, finding the leaks that are causing you to lose money, and finding the areas and strategies that are driving the majority of your P&L. This can really help with capital allocation, picking what strategies to run in your book, and more. There is a lot of nuance to this Portfolio Manager tool, so it will actually be gone over in its own video, which I will link in the description of this video. The final page on the Predicting Alpha terminal is the option calculator. Now, this is a very cool tool that allows you to do a couple of different things. First up is just a price calculator. So let's say we have an option that we're looking at. We put in the underlying price, the strike, the expiration, the implied volatility, interest rate, and dividend yield. Click calculate, and it will populate the risk metrics, a couple of different structures, and the Greeks visualizer, allowing us to actually see how our Greeks change over strikes for a given option, right? So we can change up which one we're looking at here and see how it changes across the different strikes. Right? On the risk metrics column here, we can see the premium, it should cost, the delta, gamma, vega, rho, theta, psi, and elasticity. And where it could be really cool here is we can price what we think the fair value of an option is, given any disagreements we have with the market. Let's say we're looking at the call option for these factors that we've put in, and the market is implying 25% volatility, but let's say we think there will actually only be 15% volatility. Well, the market's pricing that call at $2.85, but given our measure where we think maybe volatility is 15%, that call that's going for $2.80, we think it's actually worth only $1.75, meaning if our forecast of volatility is accurate relative to the market's forecast, we should see a $1 drop in price for these call options. And this is just one way that we can use this option price calculator to find opportunities and better understand the trades that we're getting ourselves into. Now, you can currently look at long and short calls and puts in the structure tab, but this will change over time to include many different structures that as option traders we need to be familiar with and looking at. On the next section of the option calculator, we have the volatility calculator, which allows us to calculate the different vol factors for a given option, right? So let's say we're looking at a call option where stock's trading at 100, it's a 100 strike, expires in about a week. The market price is $5, the dividend is 0, and the interest 0. When we calculate it, we get these metrics here, which give us an in-depth breakdown of the particular option that we are looking at. It tells us what our Greeks are, what the premium is, and what our implied volatility is for that option, right? So we can back out that implied vol for a given option by inputting all of these factors and then clicking calculate. Now, the final page in the Predicting Alpha terminal under the option calculator section is the event IV calculator. It allows us to calculate two things. What is the forward volatility, which is something that is used at a more advanced level of trading, and it allows us to calculate the event volatility. So for forward volatility, we're looking at the volatility between expirations. So let's say the volatility of the first expiration is 30, the volatility of the second expiration, let's say it's 35. The date range, let's say we're looking at the December 18th, 2020 to the January 17th, 2021. And let's say there's no macro vol to adjust by. When we click calculate, we get that the forward volatility is 35%. Now, we won't get into the applications of forward volatility in this video as it's a very in-depth topic, but if you go into the education archive that you got with your terminal, you'll be able to find in-depth videos about forward volatility there. Up next, we have the event volatility. So what we do here is we take the non-event vol, plug that in, the expiration vol and plug that in, and the actual expiration of the option. And when we click calculate, we can get what the implied event volatility is and the implied move for the event that takes place within this time. And there you have it, a complete step-by-step overview of the Predicting Alpha terminal. Now, as I said in the beginning, there are many, many ways to use all of these different factors. But my hope is that by the end of this video, you have a sense of the different types of functionality that you have access to. And I really hope that you can feel the excitement that comes with having this degree of versatility right at your fingertips. The ability to break down the volatility, the news and sentiment, the earnings, the fundamentals, every piece of information that an option trader wishes they could get their hands on is available for you right here in your own Predicting Alpha terminal. Now, if you have more in-depth questions about the terminal, feel free to reach out to myself or Jordan in the virtual trading floor community, and we'll be happy to help you gain an even deeper understanding of what you can do with this terminal. Happy trading, everyone, and I look forward to talking with you soon.